Being able to predict price trend reversals on a stock is one of the best ways in order to position your entry and exit points appropriately. Today I'm going to share with you the golden cross trading technique, which is one of the most reliable techniques for predicting a price reversal. How's it going, guys? Ryan here and welcome back to another investing video, and today we're talking about price reversals and specifically a technique known as the golden cross trading methodology that will assist you in predicting these price reversals and appropriately position yourself for entry or exit out of a stock. But before we get into that, guys, please remember to like this video. Helps me out so much with the YouTube algorithm, and subscribe for more investing, stock market and wealth management content on this channel. I'd love to know your thoughts below on the golden cross trading technique after you've seen the video, or if you've used it before, have you had much success with it? So guys, without further ado, let's get straight into the video. So the golden cross trading technique is a technique which effectively uses the simple moving averages of a stock. And effectively what we're doing is using two simple moving averages over whatever time span in order to predict the price reversals. And this in particular is a fantastic technique when you combine it with other technical indicators or fundamental indicators, because it is quite a clear catalyst, especially if you're looking on a long to medium term basis for a price reversal. So keep in mind, if you are looking at using the golden cross trading technique, then make sure you are using other techniques to verify that there is definitely a price reversal coming into place. So let's jump straight into the computer and have a look at a few examples. Guys, welcome to tradingview.com. I'd just like to point out I'm not affiliated with this website at all, but it is free and a fantastic tool in order to get into technical analysis, and it gives you effectively a full suite of tools for free, or you can pay for an upgrade version which allows you to obviously have more features. But let's move straight into the video. I'm going to just choose a stock that I currently follow, which is Andromeda Metals Limited. And I'm going to go to their full featured chart just so we can see how this all starts working. Now, obviously, I like to use the candle chart. It is the most, I suppose, informative in my opinion. Now, what we're going to do is we're going to find a portion of a chart where clearly there has been a change in price. Now, what we're hoping to do here is effectively predict the price change before it happens, but for the first example, I just want to show you exactly how it actually works. So what you want to do is effectively grab your indicators. You want to go and find moving averages. So just this one right here, grab two of those. And what we're doing is effectively putting in place a long-term moving average. Let's make that one, well, we'll do the short one first actually. Short-term moving average of a 20-day period. So the red line is a 20-day period of moving average. We're going to grab the second and we're going to make that a 50-day period. And let's make that a bit more bolder of a color, a darker blue, I suppose. All right, so clearly we can see what's happening here is the red line is the short moving average and the blue line is the long-term moving average. Now, what we're looking for is a golden cross, and a golden cross is effectively when these price points cross. So what we can see here is down at the bottom, we're seeing the short-term moving average, the red line, cross above the blue line, which is the longer-term moving average, and that is what we're looking for. This is our indicator that there is a change in the price direction. Now, as we can see, as soon as the short-term moving average has crossed above the longer-term moving average, we have gone into an uptrend. So this is our clear uptrend indicator. And I like to use the 20-day and the 50-day moving averages because you can act and react quick enough, but it's not too long of a period that you don't, I suppose, you're not consuming too much information at once, right? So you can effectively see what's happening in a relatively quick span of time, but it is reflective of what's going on overall. So you can see here's the short-term moving average. It's going up, 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 and then all of a sudden you get bang, the cross again. It happens, and now what we're seeing is the short-term moving average is crossing below the longer-term moving average, and this once again indicates a price reversal. So what we can see is from this point onwards, the price has decreased. So basically what you would do in this setup, for instance, is you'd enter into a position when the short-term moving average goes past the long-term moving average. It crosses the golden cross. So you'd enter here, you go up, 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 then you'd wait. And yes, you can take profits up here, whatever, but this point right here where it crosses below the long-term moving average again is confirmation of a reversal in the price. So you would sell your shares here, then you'd wait. Keep watching the stock. You might watch whatever other stocks, and yeah, you know, weeks might go by before anything happens, that sort of thing. You can see the lines are getting close here. There's a bit of contention, unease, no one knows what's happening. Okay, we've seen, oh, bang, it's crossed once again, and we can see at this point right here it's a clear cross, and we're clearly going in the other direction, and the price is, it's gone up. Then once again it's gone through the bottom, bang, and we're going into a downtrend. Once again, bang, through the top, we're going up again. This happens consecutively, and it will happen on every single stock. This is just one example, but what you want to do is look for that cross. And see here, when it does cross, sometimes the price jitters around, it's not doing too much. You want to be looking for confirmation. So effectively you want to look for, see this larger sort of gap between them. Here it sort of crosses, but it stays relatively close to one another. You want to look for a large shift, such as this one. A large shift has occurred. You can see it splaying outwards, indicating a clear price change. And it's obviously a lot harder to do this when you're looking at a relatively horizontal chart like we're seeing here. It's easier to do it at this left-hand side of the chart where there is a big jump. But what we want to do is actually predict price trends, not look back and see, okay, this is what's happened. So if we go to the current end of our chart here, what we can see is the short-term moving average has crossed. And what we can see is we didn't know what the price action was doing here too much, but with this stock right now we can see, okay, I think we've got confirmation. It looks like we're both going up. So in my opinion, if I was looking at this, I'd be saying, okay, from this point, effectively right now or a few days ago, I would have gone, yes, this stock is going to increase in value. And as a result of that, I would buy, and I would effectively bet, if I was a betting man, I'd bet on this stock increasing in value in the short term, because we've seen that golden cross occur once again. Now I've come to another chart to show you another example, and this is another stock that I follow quite closely, Nova Minerals. If we see down below in the past, the exact same thing has happened. We can see periods of unease at the bottom here where we're not too sure what's going on. It crosses, but it's not significant. The price action does not indicate a change in the trend. But when we see here a cross back above that long-term line, we can see that the price is also reacting in the same manner. We can also see, combining this, as I mentioned, with other indicators such as volume, we can see there is a clear change in the price direction. And after a few days, you can be quite confident that the price is now on the uptrend. So once again, we go up. That's our entry point around about this point when we've had confirmation. We're going up, up, up. Then once again, it crosses below. And typically when it crosses below, more often than not, when it's severe, or if it's when it's severe, when it's coming up, that is the best indicator, in my opinion, for the change in price. So at this point here, we would sell our shares. And effectively what we would have done is basically doubled our money from this point at 10 cents per share and selling it at this point for 18.5 cents per share. But you get the gist. You're effectively getting that, or I lie. you'd be down here. Still 70% profit, that is awesome. But you can see ever since that occurred, we kept going down. Now once again we can see it wasn't a very convincing change in the trend here, and we've actually continued back down. But when we did have a bit more of a significant change, which is here, bang, we saw the price increase roughly by, I'd say maybe 10-20%, still a good increase. So as we follow the chart along, you can see the exact same things we've been talking about. We had a spike here. The golden cross didn't effectively occur here. There was nothing significant that was going on for us to indicate whether we should be in or not here. So I'm assuming an announcement of some form was released at this point, which has driven a price increase. But we can see if we were in at this stage for whatever reason, we have the sharp increase in the short-term price, then all of a sudden it plateaus out and then it crosses below once again. As soon as we see it going for that line, as soon as we see the short-term moving average curve, that is when the alarm bells need to start going off and we need to start looking at exiting a stock. And really guys, that is all there is to it. It is a very, very simple technique that you can apply right now. And obviously if you're day trading, you can decrease the time span that we're using. Instead of using, 20 days against 50 days, you might want to use 20 minutes against 50 minutes to look at shorter term price trends. And vice versa, you can expand the period. So instead of using the 20 days to 50 days, you might want to use 50 days to 200 days, for instance, because that will be another clear indicator for you of price changes. And the best way to use this, as I mentioned before, is to combine it with other technical analysis techniques. Compare it with your MACD, your RSI, look at your volumes, all that sort of good stuff. If you combine the techniques together, you'll be able to have a stronger prediction on the change in price direction and be able to better pick your entry and exit points from a trade. So guys, I hope you did enjoy today's video. If you did, please remember to give it a thumbs up. It helps me out so much with the YouTube algorithm. And leave a subscribe if you want to see more stock market investing videos, trading videos, wealth management videos. I'd really appreciate it. We're building a little community here. It's really good so far. And we got about, at this stage, just over 300 subs, which is awesome. I'd love to know your thoughts on the golden cross trading technique as well, and if you've used it before. I've found it has been very reliable from my perspective, and I hope if you've never seen it before and you can put it into effect, you do make some decent gains as a result of it. So guys, with that, I'm going to wrap up today's video. I hope you have an awesome day. I'll see you next time. Cheers.